Today, we're taking a look back at 2025, some of the big trends and the big headlines in real estate and home buying, and then looking ahead to 2026. What will the housing market do? Where will rates go? We'll discuss all that coming up next. Welcome in. I'm glad to have you on the show with Bill Linton. I am Ben George. This is the Smart Mortgage Show. Please subscribe if you haven't already. We've got a good show for you today, looking back on last year, but also looking forward as well to 2026 as we kick off this new year, Bill. So let's jump right into 2025 and take a look at that first, and then set the stage for, some projections and look ahead. But obviously, the big thing for, I think, 2025, you look at rates. It's kind of a good starting point. And I think we started the year in January, we touched around 7, right? And then kind of closed out the year in the low 6s. So some positive movement for people that are looking to buy a home.
Yeah, so started out close to 7, had the tariff disruptions, which, if you remember, the stock market plummeted. We didn't know what the inflationary effect was going to be. Now, good news is we've got through that. The stock market rebounded beautifully. We see that the inflationary was kind of like a one-time pass-through, so that didn't really prove to be sticky at all. Interest rates like that, we've come down close to 6%, and really important, we've been talking about this since September, but we've been holding the range in the sub 6.5%. There's a lot of data that says that we should stay there even into next year. And we also experienced a housing trend of increased days on the market, increased inventory, which means, it's a market that's transitioning. Now, in the area that we live in, Chester County, Pennsylvania, Delaware County, Pennsylvania, Newcastle County, Delaware, and our immediate markets, it's still a very strong market. We do see some bidding wars, but more than in the past 5 years, we are seeing price reductions, and we are seeing days on market longer and more inventory, which is all really great news for the consumer.
Yeah, all really great news as well. Anything else in 2025 that you thought was kind of worth noting, Bill, from a standpoint before we look ahead? Because I think there are some, there's some positives looking forward.
Yeah, just continued dedication from the Fed to take rates lower. Housing is the largest industry in the United States. It has been, I won't say ailing, but it has been on its heels for the past few years. And it's very, very important that market is stimulated. The Fed knows that lower interest rates are part of what will stimulate that market. So they've been cutting the federal funds rate. Again, not a direct driver of 30-year fixed rates, but an overall view of the Fed for lower rates. They've paused quantitative or ended quantitative tightening, talking about quantitative easing and buying some treasuries. So I feel like the Fed is very much behind this move to lower interest rates. And usually what the Fed wants, they wield tremendous power, and they want rates lower.
Yeah, something to keep an eye on, and we will throughout the year with our market updates. So please subscribe to the channel if you haven't already. But when you look at it, it's interesting, Bill, kind of recapping it. Inventory was still a little behind those pre-pandemic levels, but I think we're kind of starting to see it edge up a little bit more year over year, which has been nice as those rates have dropped. And that kind of carries us into 2026, where, looking at the National Association of Realtors, there's some of their projections. Their chief economist had some thoughts on what the year ahead might look like. I thought it was really interesting because, you start with existing home sales because they were kind of stagnant in 2025. But the idea and the projection there is they believe they might raise 10 to 15% in 2026.
Yeah. So, and I don't think they're alone in their projections. So 2026 is setting up, at least at this point, to look a whole lot better. That there's going to be an increase in inventory. And, one of the reasons for that, Ben, is as interest rates come down, people are locked into their homes with these golden handcuffs of a 3% rate. It's the greatest rate ever, but I can't justify more than doubling my interest rate to go to a house that if I don't need to move, It's all these need to move folks that we're seeing selling their house. Well, now if we're in the fives, that person, it's the mind, I think, can wrap itself around, your brain can wrap itself around a less than double of an interest rate, but more than double. So we've seen studies saying in the 5% range on a 30-year fixed is when a lot of people are going to decide that it's time to put their house on the market, which creates more inventory, which creates more sales, which creates a situation where there's not as many bidding wars and time on the market increases. So all of these positive factors lead towards roughly a 15% increase in 2026.
Yeah, and along with that increase, they had median home prices increasing a little bit to around 4%. So just a pretty kind of standard rise here. But I thought it was interesting that, for a long time, Bill, this decade, we saw a lot of competition in the housing market. Trying to buy a home, multiple offers, you usually had to go above what you really wanted to, what the asking was in order to win out. But they're starting to see a little bit more price reduction, right, over time. We're starting to see that a little bit more.
Yeah, we are, which, by the way, that's a good thing because that's the typical dynamics of a healthy market where there's balance. And this typical pricing strategy that most people are aware of is, you put your house or your car or whatever item it is that you're selling on the market for a number that's maybe slightly higher than what it's worth, and then it's negotiated down. So that type of pricing dynamic speaks to a healthier market where, what we saw, at least in our area up until very recently, and still in some more isolated cases, is putting your house on the market at what it's really worth. And then it's a reasonable number, but it causes a bidding war, which pushes the number far over, A, what it was on the market for, B, what it might be able to be described as, its value as in an appraisal, because the comps don't even exist. But, that is a market that's out of balance. So yeah, these days on market causing price decreases, it's healthy. It's where we're headed. A more balanced housing market is really a good thing for the consumer and our industry as a whole.
Yeah, no doubt about it. And mortgage rates continuing to trend downwards. Another projection that will again help affordability as people are looking to get out of those golden handcuffs as well. And they also point out that they expect job growth to stay kind of moderate, which will be kind of helpful as well. But they just think overall, in general, Bill, 2025 is a little bit stagnant in terms of housing. They believe that 2026, the conditions are setting up for a much more meaningful recovery for the year ahead. So I know that's good news.
It is good news, and it's been a bit of a, like you said, the stagnant year. It's been a bit of a grind. Talking to a lot of people that are in the market trying to buy, just not quite enough inventory yet. That's going to open up. Also talking to other professionals that feel the same way. If we can open up the market a little bit and move into a little bit healthier landscape, it's going to benefit everybody.
Yeah, and if you are a home buyer, it's good news because should mean you get more choice, right? More opportunities to act in 2026. And hopefully sellers will also benefit from a little bit more demand as well. But I know it's going to be different market to market. I know your market's been pretty strong, Bill, there in the Northeast, but something to kind of keep an eye on moving forward. But Cross Country is there to help you out. If you are in the market thinking about buying a new home, Cross Country Mortgage can have those conversations with you to talk about the different mortgage options that you have, what might be the best fit, what fits into your overall financial picture, the goals that you have financially moving forward. You don't want to have a home that kind of gets you off track when it comes to your total financial picture. And that's what Bill and the team at Cross Country Mortgage will have conversations with you about. So get started by texting the word LEND to 21,000. Again, LEND to 21,000 and begin that process as well. But hopefully 2026, Bill, will be a very healthy year for housing. I know a lot of people will be excited to maybe flip and reverse those trends a little bit.
Yeah, we're definitely, again, barring any kind of extenuating circumstance, a variable that we're just not aware of yet, this is setting up to be kind of a stable, if rates decrease, hopefully in a stable manner, and they keep moving in that direction, and also housing continuing to kind of, shift in the direction of becoming it is definitely not a buyer's market, but any movement towards that is better. And we keep seeing that shift happening slowly, very small increments, but it is happening. And it's creating this situation of stability, which, stability is what makes our housing market over its storied history such a great investment, and why people are always going to do well. Now, there are little blips. We've had one over the last 5 years, but if you take that out and you smooth out the averages, it's the stability of our housing market that has made it such an amazing investment. Probably one of the best that we've seen in really the whole world, almost in any country, and really any time in history. We've done a really great job of setting up the conditions for healthy growth over a long period of time.
Awesome. We're looking forward to it. If you have questions for Bill, get in touch with Cross Country Mortgage. Just text the word LEND to 21,000. Also, please subscribe to the channel. If you haven't done that as well, we'd appreciate that support. Thank you for those that have. We'll have more coming up soon on the channel. So please stay tuned. This is the Smart Mortgage Show. Thanks for watching.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.